everyone, and welcome to Tuesday, where of course we take a look at the performance of the main board for the New Zealand Stock Exchange, being the NZSX50. Before I jump across and share my screen, the housekeeping. This is for educational purposes only. It's the methodology I use when I'm looking at investing in shares. So no way is this intended to be personalised financial advice. For that, you will need to go and have a chat to your own financial advisor. Right, let's take a look at the NZSX50. Okay, this is a really good positive sign. We had a positive week last week for our main board, and that was great. The thing just note, though, that down here, the volume was really, really low. There was only about $32 million worth of shares traded. So that is something that we want to see, is that the volume is creeping up, because if the volume's increasing and the share value, or the index in this case, is increasing, then highly likely the overall market will be in an uptrend and it will keep rallying. So it'll be really interesting to actually see what happens with the main board, because when I look here, we've sort of got a line of resistance sitting at around that 13,200 mark. And obviously at the moment, we're at about 12,800. So we've got about 400 points, if you like, or $400 to go before we hit that point. So it'll be interesting to see whether the market stalls when it gets to that point and then pulls back, or just what happens. It may even break through, which is what we would want to see, and then that would definitely be a very good positive sign. Right, let's put our moving averages on, and we will use the 30 exponential. There we go. So we can see that the market is trading above that moving average. Again, that's a positive sign for the market. If it's trading above the moving average, quite often it can mean that it could obviously continue. So that's what we want to see. I never want to touch a share, or even if the indices, for that matter, is in a downward trend. If the index is trading below that moving average, I definitely want to leave it out. Let's take a look at the 15-period moving average. You can see that we have got that golden cross appearing. So that's where the 15-week moving average has crossed above through the 30-week moving average, and that too is a good sign. Again, we need a little bit more time to actually see what is going to happen with the performance of our main indices, but there are some positive indicators, which is great. When I looked at the volatility on this, which is simply the ATR, which is 260.21, you can see there, and I divide it by the value of our main board, it's only got about just over 2% volatility. So again, that's good. Not a lot of risk, if you like, there. There's always risk, of course, but it's only sitting around sort of 2%. If it gets up to 5%, then again, that for me is something that I just want to steer clear of, and I wouldn't be looking at entering into any new positions. As for entering new positions at the moment, that's not something that I'm doing, but simply because I'm pretty much holding all the shares that are performing quite well on our main board. So no new shares to look at this week, I'm sorry. But last week I showed you the FNZ, which is the SmartShares Invest, or Smart Invest, that invests in the top 50 companies on our stock exchange, but it limits it to a 5% exposure. Let's just jump across and we will take a look at that. So here we go. That too had a positive week, which is a good sign. With it only having 5% exposure to basically all the shares, obviously some will have less than that, but the top shares, likes of our Sparks and some of those companies, means they aren't having a huge overall impact in the performance in this type of fund. So that is a good sign that we've actually had a positive week. And on this particular one, the volume's a little bit stronger, and that too is really good. Let's put our moving averages on for this one and see how they compare. So again, we are trading above that 30-week moving average. See if our golden cross has happened. Not quite. It's very, very close, maybe just through the 30-week moving average, but it's certainly not standing out, and that's something that you want to see. You can see some clear signals through this period here, which was sort of around August last year, you can see that the 15-week moving average was clearly above that 30-week before we started to see a decline at around February this year. And then it passed through that moving average at around March. Okay, and now we've just skipped through, but only just. Let's take these moving averages off and let's make a comparison with the FNZ, so the top 50 companies, limited to 5%, so the equal weight. Let's see how it compares to the main board. And I did this last week, and you can see here that the main board is clearly trading above the equal weight for the New Zealand market. And the reason for that is because it's the bigger companies that are actually pulling the NZSX50 up. It's not participating throughout the whole board, if you like, and that is why you're seeing a laggard there. Okay, what I'm going to do is take this off and let's look up the iShares that you can actually invest into, or the ETF, and that's called NZG. So this one here mirrors exactly what the NZSX50 is doing. So it has obviously very similar weights to the main board, and it's not limited to only 5% to those top performers. It's weighted exactly how, or very, very close to how the main board is that I look at each week to give you this share review. And hey, what we'd expect, we obviously had a positive week last week, which is what we would expect. Now, I'm going to put on the comparison for you for the equal weight, and then this will show you what I mean with the divergence. Here we go. Here you can see that the equal weight is basically a laggard to what's happening to the overall main board. And like I explained earlier, that's because we've got strong performance with some of the bigger holding companies within our market, and that is what is driving that, if you like. So there's sort of no surprises there whatsoever. But hey, to me, it is good news. It is positive. We've just got to wait and see, really, as to what is going to happen with our share market, whether it is going to continue firing or whether we're just going to stay sitting on the fence and see it sort of moving sideways, which it has really been doing for quite some time. You can see here I've got this on the 5-year chart, and it's going right back here to April, and you can see that admittedly this is a SmartShare, but you can see that it's just been basically going sideways all that time, which is 3 odd years. So yeah, we want to see some action is what I'm trying to say. Hey, I'll stop sharing that. I hope that's helped. Come back on Thursday. We are going to take a look at the NZX, which is obviously the company that runs all the shares on our stock exchange, and we'll see how that looks. So until then, take care.